So Tata Motors PV numbers are on your screen. In fact, if you talk about overall numbers, the top line has grown more than 7%. But if you talk about the bottom line, that is down year and year, close to 18%, if I see the number correctly. And even the margins have taken a hit, coming over 11%. To decode these numbers, I have with me Srishti. Srishti, what does the bottom line say about the numbers this time?
This time, the numbers do say that the performance has been really good and Tata Motors has managed to emerge out of its Q3 dismal set and the kind of impact that it has already seen. Because do remember that back in Q3, Tata Motors was struggling with a lot of these cyber-related issues, slowdown in China, as well as even the US tariff had an impact. But when it comes to the numbers then, the consolidated numbers are really good versus what the street was actually expecting from not just the India business, but also the JLR front. When it comes to the revenue has come in line to what the street was expecting, but the EBITDA number has come in at 12,532 odd crores versus the expectation of close to 10,000 crores, and the consolidated margin clocked in at 11.9%, which too is very healthy. Other than that, in terms of the profit, yes, on a YOY basis, you will see a decline, but the matter of the fact is that the company has already been struggling, and Q4 was a quarter where the waters were tested that whether or not JLR will make a strong comeback. And it really did, because look at the JLR EBIT margins. They were really strong this time around. The company has managed to clock in a JLR EBIT margin which was at 9.2% versus the street expectation of 9%. The company is saying that they have significantly improved and they have recorded the domestic volumes, which going ahead, the focus is to reduce the break-even volumes toward 3 lakh in 2 years by focusing on savings from enterprise mission. Now, when it comes to their India business, the margin performance has been really healthy. The company is also saying that the demand in SUV, CNG and EV continue to be really strong, and they are in a phase of increasing their supply and ramping up the production, and that's what their focus is. Yes, of course, the company do note the fact that the near term is a bit challenging. They need to be monitored in terms of the supply chain risk and the cost headwinds. But for JLR, the next launch pipeline in the next 18 months is going to be exciting. And for the India business, the demand is very healthy, is what the management is flagging off. Back to you.
All right, Srishti, thank you so much for breaking down in detail